Well, friends, Jogendra Rana here. Good morning. The topic of the day is insurance penetration in India. Insurance penetration in India. Insurance Regulatory and Development Authority of India report reveals that the insurance penetration and in India is 4% of its GDP. It's reduced from 4.2% of the GDP in financial year 2022 to 4% of the GDP in financial year 2023. So India's penetration is much lower than the global average of 6.8%, shows the report. The report also reveals that the density of the insurance industry in India has marginally increased from $91 in FY22 to $92 to FY23. India ranks 25th in insurance penetration and 27th in insurance density globally in 2022-23. So while insurance penetration is measured as the percentage of insurance premium to GDP, insurance density is calculated as the ratio of premium to population, that is per capita premium. Now, life insurance penetration in India is 3% of the total GDP in FY 2023, while it reduced from 3.2% in FY 2022, that is 2022. But it is still higher than the global average of 2.8% in FY 2023. So in terms of density of the life insurance industry, it marginally grew to $70 in FY 2023 from $69 in 2022. As far as non-life insurance is concerned, India is far behind global market in terms of penetration of non-life industry. It stood at 1% of the GDP in FY 2023. Last financial year, as well as the industry recorded penetration of 1% of the GDP. So the global average of the non-life industry is 4%. The density also remained unchanged at $22 in financial year 2023. If you see the insurance penetration rate of different countries, you will find US has 2.6 in life and 9% in non-life, that is total 11.6%. That is the highest. Then Taiwan 8.2 in life insurance and 3.1 in non-life. So the total is 11.4%. Then South Africa 9.1 and non-life 2.2, total 11.3%. Then South Korea 5.4%, non-life 5.8%, total 11.1%. Fifth is UK, that is 8.1% in life, 2.4 in non-life and total 10.5%. And the India ranks at 19 number, that is 3% in life, 1% in non-life and total 4%. So India's insurance penetration is higher than China, Pakistan and Russia. However, in terms of density, India stands behind China and Russia but not surpasses Pakistan. While Taiwan has the highest insurance penetration in Asia Pacific region, Singapore has the highest insurance density in Asia Pacific region. So India's insurance industry is one of the premium sector experiencing upward growth. This upward growth of the insurance industry can be attributed to growing incomes and increasing awareness in the industry. India is the fifth largest life insurance market in the world's emerging insurance markets, growing at a rate of 32 to 34% each year. In recent years, the industry has been experiencing fierce competition among its peers, which has led to new innovative products within the industry. So, over the past 9 years, the insurance sector has attached substantial foreign direct investment amounting to nearly rupees 54,000 crore, that is US dollar 6.5 billion, driven by the government progressive relaxation of overseas capital flow regulations. Then the insurance industry of India has 57 insurance companies. 24 are in the life insurance business, while 34 are in non-life insurance. So among the life insurers, Life Insurance Corporation of India is the sole public sector company. There are 6 public sector insurers in the non-life insurance segment. In addition to these, there is a sole national reinsurer, namely General Insurance Corporation of India, that is also known as GIC. So other stakeholders in the Indian insurance market include agents, that is individual and corporate, brokers, surveyors and third-party administrators, servicing health insurance claims. The insurance industry has undergone numerous transformations in terms of new developments, modified regulations, proposals for amendment and growth in 2022 or 23. So these developments have opened new avenues of growth for the industry while ensuring that insurers stay relevant with changing times and the latest digital disruptions. The Insurance Regulatory and Development Authority of India is vigilant and progressive and is determined to achieve its mission of insurance for all by 2047 with aggressive plans to address the industry's challenge. So the growth of the insurance market is being supported by the important government initiatives, strong democratic factors, conducive regulatory environment, increased partnership, product innovations, and vibrant distribution channels. So insurance industry was largely dominated by offline channels like corporate agents, offline brokers or banks. Today the rapid digitization, product innovation, and progressive regulation policies have made it possible for consumers to buy insurance through multiple distribution channels with the click of a button. So the instability of the COVID-19 pandemic highlighted the necessity for consumers to invest in products that would increase financial security, one of them being life insurance. So the insurance industry in India has witnessed an impressive growth rate over the last 2 decades, driven by the greater private sector participation and an improvement in distribution capabilities, along with substantial improvements in operational efficiencies. In financial year 24, non-life players saw a premium income increase by 19.5% year over year to rupees 1,40,014,972 crore, that is US dollar 13.8 billion, due to strong demand for health and motor policies. So the business growth for the financial year 2024 was driven by health, especially the group segment, motor and crop insurance. So the business growth for financial year 2024 was driven by health especially. So in the first year, premium share of life insurance in India LIC dominates with 58.87%, while the private sector holds 41.13%. Among the private players, SBI Life, HDFC Life, and ICICI Prudential Life led the industry in premium collection. SBI Life collected rupees 38,238 crore, US dollar 4.60 billion premium, while HDFC Life and ICICI Prudential Life received rupees 29,988 crores and rupees 18,081 crore respectively. So the premium in the month of March 23 for the private life insurance industry grew at a healthy pace of 35% on a year-on-year basis and 20% on financial year 2023. So the life insurance firms collected 18% more premium in financial year 23 compared to the year before. So the premium from India's life insurance industry is expected to reach rupees 24 lakh crore. The market share of private sector companies in the general and health insurance market increased from 48.03% in financial year 20 to 49.31% in financial year 21 and then 62.5% in financial year 23. So India is the second largest insurance technology market in Asia Pacific, accounting for 35% of the US dollar 3.66 billion insurtech focused venture investment made in the country. So this is the latest information about the Indian insurance industry on the penetration and the growth of the insurance industry in India. And in addition, one important thing is the future looks promising for the insurance industry with several changes in the regulatory framework which will lead to the further changes in the way the industry conducts its business and engage with its customers. So going forward, growing middle class, increasing awareness about the importance of insurance and digital advancements, the sector is expected to expand further, increasing life expectancy, favorable savings and greater employment in the private sector is expected to fuel demand for pension plans. The life insurance industry in the country is expected to increase by 14 to 15% annually for the next 3 to 5 years. The scope of IoT in Indian insurance market continues to go beyond telematics and consumer risk assessment. Currently, there are 110 plus insurtech startups operating in India. The schemes are also there. India's demographic factors such as growing middle class, young servable population, and growing awareness of the need for protection of retirement planning will support the growth of the Indian insurance sector. Thank you very much.